that, a very warm welcome to you. This is Business Today. As usual, we're with you on a Wednesday night to give you the latest in Sri Lankan business stories. We give you local stories as well as international stories on today's episode. We also have a key personality who's going to talk to us about a select industry. Just to run through some of the key topics in today's discussion, Saudi Arabia and Russia agree to oil output freeze. Later on, details are later on tonight's show. Also talking a little bit about the local stories. Fitch rates Hashim National Bank subordinated debt final A+. Also dealing with the Colombo Stock Exchange, new capital adequacy requirements for stockbrokers. So those are the key stories on today's episode. Apart from that, we will give you local and global corporate stories in detail. We will also talk to you about the Colombo Stock Exchange just to evaluate and see how it has been performing over the past few weeks and what is in store for you in the future. Just to start things off with, we'd like to introduce our personality today. Well, a heritage of 100 plus years marked by innovation, strong relationships and a commitment to sustainability. Let's welcome our guest tonight, Mr. Arun Hydramani. A very good evening to you.
Good evening.
So Arun is the director of Hydramani Group, and he began his career as an analyst in investment banking at Credit Suisse in New York. Before moving to the Hydramani Group in 2003, he has been instrumental in the growth of the group's apparel industry and its continued evaluation as a model for operational excellence and environmental sustainability. So as you can see, we're going to talk about the apparel industry today. Let's talk a little bit about the group as a whole before we get into a sort of a microeconomic analysis. Hydramani Group, you joined in 2003. What's your story before that, and how has the company been for you?
Okay, sure. First of all, thank you very much for having me on the show. I'm looking forward to our discussion.
It's our pleasure to have you.
Our company has, as you mentioned, we have a rich heritage. It was founded by my great-grandfather over 100 years ago. We started off as a small business. My great-grandfather had a tailoring shop, and he aimed to provide one-day service to customers. And I think that was kind of the beginning. We always tried to do new things in the Sri Lankan economy. Since then, our company has grown quite significantly. We've pioneered quite a few things. We've been the first in large-scale manufacturing in terms of factories in the 1950s. We started exports in a major way in the 70s, and I think that helped to spearhead the exports of the apparel industry. And in more recent times, we've focused on sustainable manufacturing, lean manufacturing, and diversified into a few other industries. So overall, we've matured. We started as a family-run company. We're now professionally run. We're a diversified conglomerate, and we're quite bullish about the future of Sri Lanka.
Right. So you boast a very great and rich history. You employ about 50,000 people at present. Talking a little bit about the apparel industry, today the Hydramani Group boasts about 35 production facilities across Sri Lanka. Some key projects that we can look out for in the near future, which we'll discuss later. So the production facilities are spread throughout Sri Lanka, Vietnam and Bangladesh, and has a capacity of 15 million pieces per month. So as you can see, those numbers alone reflect how great apparel industry is to you. Let's talk a little bit about the apparel industry, its role in Sri Lanka and the impact it has on the country's economy.
Sure. So, in my opinion, the apparel industry is a key driver of this economy. I serve, one of the great things about the Sri Lankan apparel industry is how united we are. We have an association called the Joint Apparel Association Forum, which encompasses a lot of the leading manufacturers in the country. I serve as chairman of the Future Leaders Committee of that forum, and we're really working together to come up with a strategy to continue this industry. I have some statistics. In terms of exports, the apparel industry hit almost $5 billion in exports last year. So it made up 40% of exports of the country. And as an industry, we are determined to grow. We initially had a goal by 2020 to hit $8 billion in exports. We are trying to better that and hopefully achieve 15% year-on-year growth. So it's definitely a good potential for this industry in Sri Lanka. In terms of some of the key success factors, has been the reinvestment and the new thinking that's gone into the industry. We haven't, we don't have a large labor supply compared to some of our other competitors in the region. So we've had to make our labor productive, focus on innovative manufacturing techniques, and provide other solutions to the customer, not just contract manufacturing. So, we have design, we provide logistics. So these are very important.
Right. So Hydromoni's reputation for streamlined processes and high-quality products is extremely highlighted by its long-term partnerships with leading global brands. Let's talk about some of these global partners.
Sure. So actually, I was just on the phone with a customer before I came on the show, and it's a very demanding marketplace at the moment. I think that the consumer behavior is changing, and we have to be very close with our customers at the moment. One of the key challenges our customers have is learning how to deal with the millennial customer. And I think I can call them millennials. I'm born in 1979, so I just missed the cutoff. And the millennials are shopping in a different way compared to previous customers. They want to shop online. They want fast fashion. And because of that, we've had to engage more directly with our customers, provide more faster design solutions, more speed to market. And these are things that are going to have to increase in Sri Lanka if we're going to continue to be successful with these partners.
Right, so that brings me to my next question. The Hydromoni Group keeping up with international changes in terms of lifestyle changes, the changes in the consumer and the client. How do you keep up with the technology?
Well, the first thing I feel is in our company, we've never been scared to take a risk, because this industry is changing very fast. And in terms of production, design, supply. So I think the main thing is to keep up with the latest. You need to know your customer, and we do that. Aside from that, we're investing a lot in automation and lean manufacturing. Like I said, Sri Lanka is not a large country, and we have ambitious growth plans. And to do that, we need to make sure we can make our labor more productive. We need to create better working environments and more automated facilities. So that's really one of our main goals, to increase that.
Productivity in a nutshell is essentially output per worker given an hour, given a time frame. What sort of tools do you use to enhance productivity in a worker?
I think the most important thing is mindset. This industry has been successful for so many years in the country, and we've run certain processes. But I think we need to really relook at those processes. That's what we're doing in the company, looking at lean manufacturing, taking ideas from the automotive industry. We have a lot of young industrial engineers also employed in the company, and they're bringing new thinking. They're questioning some of the processes we've had. So with that, I think we can then simplify the day-to-day roles of our employees. And then once we add automation to that and have the latest technology, then we can definitely increase our productivity.
Right. So quality and timely delivery are two important factors in this whole system you're part of. How do you guarantee these two qualities?
When you work with leading brands, that's almost a given. You have to be on time, and the quality has to be good. So I think the main thing is to have very, very good systems. And I think Sri Lankan Apparel has done that. So we've invested in ERP systems. We have a partnership with Microsoft. You have to have a very clear understanding of your entire supply chain process. So that helps you with the on-time. Quality, Sri Lanka is known for its quality. We have such talented people in this industry, and I think who are proud to be in the industry. And that really helps us to create great garments. I'm sure if you go to a retail store anywhere in the world, when you see a made in Sri Lanka garment, the quality should be good.
Right. So in today's dynamic financial environment, innovation and sort of pumping in money in terms of R&D is a key stimulus to its growth. What sort of factors do you consider when you're investing in R&D?
So we look at R&D in a holistic way, not just for the apparel industry. We have large investments in the IT sector. So we have a lot of young entrepreneurs in the company who are driving forward some new thinking in terms of processes. We also work in a large way on the supply chain, so working on new fabrications. We have a team that attends many fairs and shows, and we have tie-ups with some key suppliers that really helps us to bring new innovation and new techniques to our customers.
Right. Just so we'd like to turn towards the future now,
Sure.
Future of the industry. But before we do that, I'd like to ask you to sort of recap just some of the market trends that you have picked up over the past few years?
The market trend is speed and choice. That's what the customer wants. They're really asking. They want, if they see something they like, if they see something on Instagram or they see something on social media, they want to be able to go to a store and purchase it the next day. So it's very different from the traditional consumer behavior. So we've had to change. We've had to add a lot of flexibility to our processes and speed, so we can supply those needs.
Right. So the sort of theme I'm going to enter now is sustainability, because sustainability is absolutely essential to make sure you withstand the pressure, the sort of competition,
Sure.
and dealing with all sorts of other changes internationally in terms of lifestyle changes.
Yeah.
What is the secret behind remaining competitive regionally and internationally?
Well, sustainability in Sri Lanka, I think, has been practiced for a long time, because we have scarce resources in the country. So we have always been conscious of conserving our resources, and our group sustainability strategy focuses on reducing the energy and water usage in our factories, and we've seen some tremendous results. We've invested additional capex to make our factories energy efficient and achieve carbon neutral and LEED certified status. But there's definitely the way forward. You can have savings in overhead once you implement these processes, and every new factory that we implement now has these green processes, and we have some great results. We have a factory called Mihila in the south of Sri Lanka, which has really spearheaded the sustainability journey for our company, and we've taken it to new levels now.
Right. So what are some of the interesting projects that the Hydromani Group is going through right now?
Well, we are looking obviously at the future growth of our company, and one of the key areas of that is expanding into other areas of the country. So after the war ended, we realized we need to look at the north and east. In 2012, our CEO of one of our apparel sectors at the time, Tony, was very passionate about starting in Vaunia. So we started a training center in Vaunia, and the results were remarkable. We didn't know what to expect, but we were able to scale up quite quickly. And at the end of last year, we had over 1,000 employees. This year, we're planning a big expansion in the factory. We will have 2,500 employees in Vaunia by the end of the year, making it one of our largest factories in the country. More recently, we looked at another area. We looked at Mullaitivu, which is obviously one of the hardest hit areas during the war. Tony once again was able to meet with the army and the local government, and they really supported us in finding land and identifying an area where there was a lot of need for employment. And again, the results have been very, very positive. We opened a training center where we were looking to start. We needed to fill about 60 vacancies. 600 people came on the first day because there was so much need for employment. That's the time when we realized we need to build a major factory in that district. So we now have 1,000 employees in Mullaitivu, and looking to grow that. We have had a lot of support from the government. President came to the factory last month and came for the ceremonial opening, and it was such a morale boost to our employees, and we really are looking at expanding now in that area.
Right, so we did mention a few things about the vast unemployment situation in Mullaitivu, but in particular we'd like to go into detail about the factory you opened in March 2015 in Mullaitivu.
Yeah.
Talk to us a little bit more about the experience.
Sure. So what we saw, first of all, that there was a large population there, but they had been through a lot. There were a lot of broken families. So we realized what works for us in the Western Province or in other areas. We had to change. We had to slightly change our manufacturing ideas. So we actually work on a shift basis. So we give the employees the option. They can come on a morning shift or an afternoon shift. So they can get some of their other work done. They can tend to their families. So and that method has worked for us. We have a lot of management from the area as well, and it's really nice to see some of our existing teams from this part of Sri Lanka working with the teams in northern Sri Lanka, and I think they're managing to coexist and bring a lot of new ideas.
Right. So next, I'd like to talk about the most important bit of this discussion, the future. Where are you heading right now? Let's start a little bit about your view of what sort of opportunities that lie ahead.
Well, I mean, the current economic conditions are quite tough. I mean, I'm not going to deny that, both internationally and here in Sri Lanka. But I'm an optimist and I'm positive for the future, especially for Sri Lanka apparel. Like I said, we have a world-renowned brand. We're well known and respected for our quality and our sustainable and innovative practices, but that's not going to be enough. As you mentioned, productivity is key. So our focus is to continue to improve that productivity. I think this industry, we have taken labor for granted a little bit. You know, it's always been a labor-intensive industry, but now we really have to make every process more productive so we can grow this industry. I think the government and in terms of, we have to grow exports in this country, and we play a key role in growing the exports, and I'm confident that we can do that. So that's the main thing. One of the other key factors, there's a lot of Sri Lankan talent outside of Sri Lanka. If you go to Bangladesh or Indonesia or Pakistan, there's great industrial engineers and general managers running large factories and industrial businesses, and we have to create an environment for them to come back to the country. And I think when that happens, you know, it'll be a multiplier effect, and we can really continue the growth.
Right. So from an entrepreneur's point of view, what is your view in some of the challenges that Sri Lanka has faced that may have hindered economic growth in Sri Lanka the past few years?
Well, first of all, obviously we had the war, and I think despite the war, I must credit you know, the generation before me in the business community. They've really grown this economy, and we have a vibrant economy. Since then, I think, you know, we focus on growth, and obviously there's in terms of balance of payments, you know, we have grown, and we have debt. So that is something that is of concern. But I think the government has a plan, and then we also have a plan to increase exports as a percentage of GDP, so we can improve that situation and spearhead future growth.
What are your thoughts on the current economic performance in Sri Lanka, macroeconomic performance of Sri Lanka, and some of the future trends?
Well, interesting enough, you know, I think last week speaking to my father, and you know, a little bit concerned about the situation, and he reminded me of 1983 and you know, how bad things really were. And I think you know, the country and our company had to really, you know, go through many hard times, but we were able to do it. And I think my generation in the business community, we have to keep that in mind, that, you know, we've been through a lot in this country. And yes, there are some short-term macroeconomic issues. People are worried about China and overall the oil prices. But I think, you know, if we continue, if we're positive and continue on the key sectors of our economy, I think there's a lot of potential for Sri Lanka. And I think the international community is waiting to come to Sri Lanka. The president is currently in Germany, and I think there's great response. And hopefully we have the GSP Plus coming back to the country, and it'll create tremendous opportunity. So we need to remain positive. I think that's the key point.
Right. So despite being a market leader in the apparel industry, Hydromani Group is also a diversified conglomerate with interest in multiple areas. Let's talk a little bit about these areas that they have invested in.
Sure. So our core business is apparel, and will always remain apparel. But there are a lot of additional businesses that we've invested in throughout the years. And I think we are very bullish on the Sri Lankan economy, and so we've looked at key sectors of the economy and invested accordingly. One of the key sectors is tourism. We've been in the hotel business for over 30 years. We have one investment with the Hilton and two with the Taj Group, and we're looking to obviously grow those, and we see great potential for Sri Lanka as a leading tourist destination. Aside from that, you know, the government has a goal to increase the usage of renewable energy. I think by 2030 we would like to make that our major source of energy, and we're very active in that sector and hope to increase our penetration in that sector. One of the areas that adds on to our apparel business is IT and services. So we have a company H1, which is a key Microsoft partner, and we implement IT solutions, including ERPs, etc. And that's another area of the business we want to scale throughout the region. We also are in the financial services KPO business, and we think that's another business that can improve. We also are bullish on the Sri Lankan consumer. Our heritage, our roots are in the local brands. We had in the 60s and 70s brands such as Diplomat and Popular. These were the leading local brands, And once again, now we have the leading denim brand in the country, LICC, and we're also in a fashion brand, Radisi. So we think those sectors have a lot of growth potential in Sri Lanka, and we want to focus our investments in those areas.
Right. So what sort of moved the group to diversify? What are the motives behind it?
Like I said, I think Sri Lanka has many things to offer. I mean, the apparel industry is our key industry, but we have a beautiful country. We have such a skilled workforce. So we, as a large conglomerate, we feel that we should be in a number of industries, so we can take full advantage and help to grow the economy.
Right. So we have a beautiful, diversified green country.
Yes.
How does this green revolution affect the business you're in?
I think it's a positive for Sri Lanka. You know, I think even if you see on a factory basis, everyone in the factory they want to conserve. You know, they're looking at we have a program in some of our factories that our employees came up with, where we provide organic fertilizer to farmers around the factories, and then we buy the organic produce for our factories, and we continue to invest in those sort of areas. So I think it's inherent in our culture to be green and care about the environment, and it's going to hold us in very good stead.
We're in conversation with Mr. Arun Hydramani. He's the director of the Hydramani Group. Mr. Hydramani, what's the final message you'd like to leave us with tonight?
The final message is we're in a very privileged position, I think, in Sri Lanka. You know, I think there's peace in the country. Our government is engaging with a lot of international parties, and I think we need to take this chance to really bring this economy forward, focus on the key sectors, and make sure that we achieve all of the economic goals and growth goals that we have.
Right. Thank you very much for being with us this evening. You gave us a very exclusive and detailed insight into the apparel industry. Thank you very much for your time.
Thank you for having me. I appreciate it.
Thank you. When we come back, we're going to go in for a quick break. When we come back, we'd like to talk about road to business and also some local and global business stories in detail. Stay with us. Welcome back. It's the 17th of February and this is Business Today. We're going to start this next segment on tonight's show. It's called Road to Business. This is when we bring in an entrepreneur who has first-hand experience dealing with the Sri Lankan industry, dealing with Sri Lankan sort of skills, and he's talk a little bit about his experience to evaluate his journey. We'd like to welcome Mr. Hussein Masadri. Thank you very much for being with us. He is a corporate trainer and consultant. So we heard that you sort of requested the professional advice in terms of revamping your business. So we want to know your journey and why you sort of got professional help. Let's talk a little bit about what you do first.
Firstly, thank you, Sakoni, for having me on this show today. Basically, I've been in the field of training and consulting for the past several years, almost 8 to 9 years. And I've been focusing on a particular segment, finance and management. But out there in the market is fairly diverse with so many needs which come in different forms. And I've thought and felt the requirement that need to look at it from a more progressive point of view. And this is why I felt there is a little more need for aggressive marketing. And in my journey, I apparently came across a person whom I had met some time back. His name is Heshan Edrisinghe. I just made a casual sales call to him, and then whilst having a chat with him, he told me of a unique service which he offers in terms of generating online leads, because this is one area which I felt which can really help me in promoting the services of training, consulting, and I'm also into outsourcing the accounting services, because as a professional accountant myself, I'm also engaged in outsourcing accounting services to various small and medium-sized clients. And the services which I have been engaged with Heshan, I found quite lucrative because it has helped me in generating various leads.
Right. So, like we mentioned at the outset, this is Road to Business. The reason we have brought in Mr. Masadri today is to talk a little bit about his journey, to evaluate his journey so that we can learn from his setbacks and just to make sure you won't repeat the mistakes again. So let's talk. So that is what you do. Let's talk about why you needed to seek professional help in terms of revamping your business.
Because basically today the field of trading, consultancy and outsourcing is not just providing the skills required. You have to make your product known or the service known. And in this thing, marketing is one key area which is required. So as a result of the need for marketing, that is one area which I felt I need more professional services, because the market itself is rather diverse. You get so many segments, so many types of requirements, so many different diverse needs coming in from clients, which come in from various nooks and corners of society. And reaching out to them in the traditional way through sales calls, personal selling is not going to work anymore, because the online sources that we have today are extremely useful, and I feel there is a potential that we can capitalize on these services and make use of the opportunities available on social media, various web sources, in order to capitalize and take marketing to a greater depth.
Right. So this whole process where somebody reviews what you have been doing and why you have been doing that and giving some suggestions to you in order to make your business flourish a little bit more, how long do you think this examination process will take? How long do you think these professionals would take to study how you have been conducting your business?
Well, actually, it's an ongoing process. It's a little difficult to have a specific time frame, because now the services that I have just engaged in terms of generating leads has just commenced. And initially, I found the cost of generating leads was very low. It's about just 25 cents, US cents per lead, whereas otherwise it would cost much more. And it's a little difficult to give a time frame, because the whole process of service generation comes in over a period of time, and that is why. But I would say traditionally it would take probably maybe sometimes 6 months, but in this process it could take probably a little lesser, maybe about 3 to 4 months. But again, it's a continuous thing. It does mean that at the end of 3 months or 4 months that your journey is over, because it has to continue.
And when did you start this process?
Well, I started about 2 months ago.
And how many people are working on your case?
Sorry?
How many people are working on your case at the moment?
Well, there are people who have come in terms of the leads which is generated through Heshan, and as a result of it, it's a continuous process. So initially I got about 40 to 50 leads generation, and the process through which I have continued is just ongoing. So I mean, that's basically the number which is currently.
Well, thank you very much, Mr. Hussein Musaji, for being with us this evening. Once again, this is Mr. Hussein Musaji, corporate trainer and consultant, who sort of needed to recruit to have some professional advice in terms of revamping his business. So today he spoke to us about why he needed to seek professional help. Like this, you too can connect with us and share your experience, share your journey, so that others can learn from your journey and the path you've taken. With that, we end this segment. When we come back, we have updates from the Colombo Stock Exchange, and we'll have a financial advisor talking to us a little bit more about what is happening in Sri Lankan's financial markets and what the future predictions are going to be like. Stay with us. Welcome back. I'd like to run through some of the top stories on today's business today. Saudi Arabia and Russia agree to oil output freeze, making top corporate stories overseas. And in Sri Lankan stock market updates, the CSE says new capital adequacy requirements for all stockbrokers with effect this year. And Fitch rates Hatter National Bank subordinated debt final A positive. We'd like to talk about those stories in a bit, but for now we'd like to start off with the financial segment. We have Mr. Dimantha Kuhumbang Wickremage, the General Manager of Asset Line Securities and Asset Line Capital, joining us today. A very good evening to you.
Good evening, Sakuni.
So today we have to talk about a lot of colorful things. It's a crucial part of the program, I think, because we want to know what has been happening in terms of the numbers, globally, regionally, and what has been happening in Sri Lanka. Let's start overseas. What has been happening in the global financial market?
I think just to run through before starting off where we are right now, I would just like to remind the investors what this progress over the last 10-15 years, how capital had been moving. I mean, we've been talking about the BRICS, CIVETS, MIST, emerging markets. Then suddenly last year we find money flowing out of Asia. We've had a bad year. We've seen over $750 billion going out of this region, which is up from about 200 plus the previous year. Oil, China, other commodities. So all these things had been very volatile. So when we talk about the global perspective, it's a bit of a turmoil. Everyone's looking at, okay, where are we going to go? But the real question is, who's where, and on this cycle, where are you? So you look at the countries in terms of the region. Where are we in terms of Australia, Japan, China? Where are they? Then looking at the US, Europe. So all these move in tandem, these move in cycles. So I guess that's where we really need to focus on. And from a perspective of what happened last year, we've seen, I mean, Asia in particular, MSCI is getting hammered. We've lost almost like 16% from emerging markets on the index. I mean, Sri Lanka is no different for that. We've lost 16% here. I mean, so we move in tandem. So it's really important from a perspective of, top-down approach to look at where the globe is going, and then when you look at investments from a perspective of that, and then to focus on what Sri Lanka has to offer at the end of the day.
Right. So where do you think the financial market is moving, heading?
Well, there are, from what I look at it from a perspective of an investor, from a fund manager, is that I always look at opportunities. When you look at the past, even when you look at the Asian currency crisis, you look at the bubble, tech bubble, then you look at in 2008-9 global financial crisis. 2015 also would have a lot of silver linings. So I would look for opportunities. I'm an opportunist, and I always go the other way. That's what I like in this. This creates a lot of opportunities. It's once you look at from the top-down approach, and then you look at come down, okay, where do you want to invest in? Where are you? For an example, we looked at consumer 3 years ago when no one was looking at consumer, which was pretty down and out. We were thinking, okay, from a perspective of investments in the Colombo Stock Exchange, we have very few companies, and the problem is that liquidity from that perspective. But nevertheless, when you look at it, we really need to focus on where do you want to go. So 3 years down the line, I'm sitting here and telling you, look, my stocks are 400% up.
Right. So let's move into a regional comparison. Sri Lanka versus other countries in the region, Vietnam, Singapore, Malaysia, India, you name it. Let's have sort of an analysis.
Well, I would say I would prune it down. I would prune it down to the emerging markets and where we can compare with. We can compare with Vietnam, we can compare with Bangladesh. If you look at the overall emerging market perspective, I think since since the Asian crisis, we are looking at very, very good valuations. It's just that the globe, the concentration is somewhere else. Money has taken a flight. China, everyone's talking about, okay, let's look at the risk factor. Everyone will talk about first risk. So they look at the risk factor and talk. You ask, I've gone through many fund managers who talk about China, talk about oil, talk about gold, you name it. What they're saying, or what we can look at right now, is that the focus is not here. But why can't it be? From a perspective of the region, as I come back again onto valuations, is that these valuations, price to book valuations and the PE valuations look quite attractive. at the end of the day, you come down to valuations.
So valuations, it seems to be like a key word. Why don't you define what valuations? What does valuation mean to somebody who has no interest or no experience in the financial market?
Well, looking at from a investor's point of view, many people ignore this fact. They always like to go on a herd instinct. What other guy does, you want to jump at it. I would say, stop. Think about what you want to buy, what you want, what do you expect from it, and see, do you get value for what you buy? And from a value perspective, I'll look at a broader picture since we have not much time. We look at price to book valuations. How cheap is it? In terms of price earnings ratios, how expensive is it? So if you look at the region, we talk about quite a bit of decent valuations on two things. One is your earnings have picked up. Two, the prices have come down. So you look at a better picture right now. It's just that we need to look at when to get in. I would say for any investor, look at value, but keep cash at hand, because I think that's the end of the day that it's going to be the king. So start investing, look at valuations, and keep enough cash in your kitty so that you can buy at right valuations at right time.
Well, in Sri Lanka's case, would you say that the valuations are correct?
What I would put it the other way around. I see it's improving.
Okay.
We look at corporate earnings. We find quite a few improvements on several segments. At the same time, we've seen, if you look at going on sectors, we've seen banking getting hammered, of course, for reasons which is obvious reasons. But then again, we come back again and see where are the valuations now. On consumer point of view, we've seen consumer demand growing. We've seen the supermarkets doing quite fabulously. Cargill's, Keel Super, all those, Arpico, all those. So that means obviously we are seeing something happening in the economy. So we need to focus on where valuations are and focus on pure valuations.
What should you look at?
Well, my focus right now, as I said, for the last 3 years, I've been very focused on, and I've been very bullish on consumer. So I'll say my favorite sector still is consumer, because it's growing at quite a hefty pace. With Sri Lanka, the potential is quite, I would say there's still more potential for it to grow. People having cash in their hand, so investments are now coming good. When you look at all those things, I still, my favorite sector is still consumer, but I'll look at banking when it comes, especially look at valuations and look at banking and the other sectors. I like manufacturing as well. Looking at the last quarterly earnings, we've seen quite a bit of manufacturing companies doing good. Obviously, their input prices are lower, their margins are better, and from a perspective of their markets, it's improving.
Right. So 2015 has been a bad year to be in business. The stock market hasn't been performing that well. In terms of the BOP crisis, the deficit has gotten bigger, and we've had a rupee depreciation, so many things. So some might say that this is not the time for the weaker heart to be in business. Others say this is the best time to be in business. What sort of advice would you give us?
Well, 2015, I don't say that it's a bad year for business. Well, when we look at it from a market's perspective, yes, interest rates have gone the other way. Stock markets have been quite negative. But I still see there's potential. When you look at it, I wholeheartedly agree with you. The external imbalances, external issues, the imbalances that we have, but we need to fight through. We need to. Right now, what I would like to suggest and what I like to recommend is that don't look at things which are afloat. Look at real things. Really go in depth into analysis to find out what is going on and keep looking at them.
Right. I'd like to touch on the equity market before we wrap things up here. Talk a little bit about equity markets and where they're heading.
Well, my personal view is that it's going to go through a bit of a hard time, but the landing is not going to be that hard. I feel it's going to float a little bit. Keep hunting on these, because we've seen foreign buying happening on very selective counters. They have not run away. If you look at debt markets, yes, we've seen about 150 billion last year going out. Right now, for these 2 months, we've seen about a 40 billion outflow. But nevertheless, we've seen only about a 4 billion outflow in equity markets. So from that perspective, I still feel people who are looking at value still has value in here. So from equity perspective, I would say keep an eye, I mean, this is not a bad time to get in. You see opportunities, but hold on to your cash as well, so that, you know, if you can get things at a better price, so much the better.
Right. With that, we'd like to thank you very much for being with us and talking to us a little bit about the financial market. This is Mr. Dimantha Kohombang Wickremage, the General Manager of Asset Line Securities and Asset Line Capital. Thank you very much for being with us.
Thank you, Sakini. Thank you so much.
With that, we'd like to take a look at some of the corporate stories making headlines today. Well, the leading corporate story across borders today is the fact that Russia and Saudi Arabia agreed to freeze the oil output. So Saudi Arabia and Russia have agreed to freeze their oil output after talks in Qatar fixing production at January levels. The Saudi oil minister and Russian energy minister, they said that they will not cut back production. They agreed that they will not cut back production, with Qatar and Venezuela also agreeing to participate. Brent crude oil was off an intraday high of $35.45 a barrel, ahead of the meeting between the world's largest crude oil producers, trading at $34.14 per barrel after the announcement. Jasper Lower of CMC Market issued a statement which said the output freeze is disappointing because it's not an outright cut, and with Iran not a part of it and not a part of the meeting, it is still a bit far-fetched to think that this is a precursor to a future cut. Iran's absence from meeting means overall OPEC output should still rise. A freeze would not create an immediate U-turn because it creates a better foundation for the price recovery in the second half, says the managing director of the consultant Petromax GBS, said in a note to clients before the meeting concluded between Russia and Saudi Arabia regarding freezing their oil output. And in stories here at home, the Colombo Stock Exchange says new capital adequacy requirements for stockbrokers. Sri Lanka Stock Exchange is in the process of implementing a risk-based capital adequacy requirement for stockbroker firms, replacing the minimum net capital requirement of 35 million rupees, says pending approval of the SEC in a statement. The risk-based capital adequacy requirement would replace the minimum net capital requirement of 35 million rupees, the CSE said in a media statement issued recently. It will be applicable for all members, trading members of the CSE and licensed by the Securities and Exchange Commission of Sri Lanka. The net capital is derived by deducting terms which are not immediately realized in the shareholder funds of the stockbroker firms as set out in the CSE stockbroker rules. At present, the minimum net capital requirement is fixed for all stockbroker firms regardless of the risk undertaken by each firm and does not provide sufficient weight to different types of risks that a stockbroker firm would be exposed to, as such risk exposure arising from the trading activities and the operations of the stockbroker firm. The CSE has obtained the feedback of the SEC and the stockbroker firms when developing the said capital adequacy requirement method, and the board of directors at the CSE has approved the capital adequacy requirement method and the rules on the 8th of February 2016, and said that the capital adequacy requirement method and the proposed rules are pending approval by the SEC. The implementation of this would be a significant landmark in the regulation of the securities in Sri Lanka, which would enhance the financial and operational capabilities of the stockbroker firms, said the CSE in a statement issued today. Meanwhile, Fitch Ratings says that on 16th of February in Colombo that Fitch Ratings has today assigned Hatton National Banks PLC proposed subordinated debentures of up to 7 billion rupees, a final national long-term rating of A+. The assignment of a final rating follows the receipt of documents confirming to information already received, and the final rating is the same as expected rating assigned for the subordinated debt on the 4th of September 2015. The issue will have a tenure of 5 years with fixed coupon rates, and HNB expects to use the proceeds to reduce asset and liability maturity mismatch while improving it to Tier 2 capital base. Meanwhile, the key rating drivers says that the proposed subordinated debentures are rated one notch below HNB's national long-term rating to reflect the subordinated to senior uncensored creditors. HNB's ratings reflect its strong franchise, satisfactory capitalization, established check record, and higher risk appetite than its better rated peers. The rating on the proposed debentures will move in tandem with HNB's national long-term rating. And with that, we'd like to wind up this episode of Business Today. Thank you very much for being part of today's show. We hope you have a pleasant night ahead. Good night. Take care.